Okay, excelente.
Yes, we can.
All right, thank you from the beginning. I'm going to do this. Make sure this works. Does not.
I'm sorry, I thought we were all
I know.
set
You
to
know what?
go. I apologize.
Letitia and Ken have so much patience with me each week when we do our presentation because it's a crapshoot on is it going to work? Here we go. It's not going to work. All right. I hit record. We are recording. So welcome everybody. Can you believe it's week 6? I'm so excited that you are still with us on our journey. Tonight, I am really excited to introduce you to Dr. Renee Castrigano, who is an assistant professor here at Gannon that teaches both undergrad and graduate students, as well as works closely with the United Way for their volunteer tax assistant program, where she uses her students in accounting to do the taxes for community members. So they actually come into Gannon, the students go down and actually work on their taxes for them. So it's a great program. I'm so excited that she's here to talk to us and teach us about financial projections. And I know that there is a simulation. So without further ado, I am going to turn it over to Renee. Renee, thank you.
Hi there, everybody. I'm Renee. I don't want my doctor, even for my students. I'm not into that. And I do teach here, and since Kathy gave a plug to Ebitda, if you need your taxes done, call United Way. There's a 1-888 number, 829-5680, I believe, and schedule an appointment. I think the limit is $57,000 this year, so you have to be under that income level. And we can't do corporations. So if you're a corporation, we can't do you. But if you're just a plain old individual with a 1040, and any other schedules, we can help you out. So a little plug to Ebitda.
I just want to make sure, can you hear Renee talking, Letitia and Ken?
I'm seeing nods.
Can you
Yes.
hear her? Or is
Yeah.
she kind of soft?
A little quiet, but we can hear.
Okay. Okay, so
If I stay 6 feet away, are you guys okay in the front if I have my mask?
Yeah, so that blue line, I think, indicates
Yep, the
the
6
spot
feet.
you need for us.
Yeah. So you don't have to be up against the wall. Okay. Thank you, ma'am.
So my question is, how comfortable are you with accounting? Do you know what financial statements are? Financial statements?
I'm very uncomfortable and unfamiliar with accounting.
Vaguely. How are you so comfortable?
No, uncomfortable.
Uncomfortable. I
Yeah.
thought you said you were comfortable. I'm like, wow, okay.
I know what they are. I wouldn't say I'm comfortable.
Okay.
I mean, I was a booster board treasurer and did QuickBooks, but I would say I was not qualified to do that.
Okay.
Letitia and Ken, how about you guys?
Any level of comfort on accounting?
Not very comfortable.
Okay, great. So I don't have a whole lot of slides, and part of it is because I didn't know where your comfort level was and how much extra talking I would need to do in order to talk you through what a financial projection is. And that's fine, I love it. I love having people with that entrepreneurial spirit. I want to jump in this, I want to take risk, I want to be excited, I want to do something to change the world in some way, but I don't know accounting. I love that. It's so exciting. So, here's our agenda for tonight. I'm not a PowerPoint person. When I teach, I write on boards. And Kathy nicely sent me Dr. Joe's PowerPoint. And I showed it to my husband and I said, oh my God, what do I do? Like, I don't even know how to start. And he said, Renee, do it your way. I said, okay. My way is very simple. Sorry. So why do we have to do financial projections? Why do you have to go through this exercise? There's 2 approaches to it. We use both approaches, just so you know. What are the assumptions? What is an assumption? What are they? What do we have to do? How does it play into financial projections? I said either 2 or 4 outcomes. So an outcome being, what deliverable do I have? What do I have to deliver to my investors or to the bank if I want to get a loan, or to a leasing company if I want to get space to rent and I have to show my financials? What are the outcomes? Well, it's financial statements, and there's 3 of those. An income statement, a balance sheet, and a cash flow. Those are the 3 major financial statements. And what are called KPIs. So if you tell someone in the business world, my KPIs are, they'll know what you're talking about. There is a lot of software out there to help you do this. It's not necessary, but if, I'll tell you about like the 3 biggest ones, and my husband uses one of them, and I'll tell you a little bit about that. And then some common mistakes. And then not on the list is, for lack of a better word, a case study. And we're going to create a business plan for a travel agency. So my husband gave me this idea just because we like to take these short little weekend getaways. We very rarely go on a long vacation. But leave on a Thursday, come home on a Sunday, I love it. It's just enough time to recharge. I've got 2 old kids, 21, 23, and then I got a 4-year-old. Long story, but anyhow, I have a 4-year-old, and sometimes we just need to get away from everything. And I love planning the trips. So my husband calls me a travel agent. He always says, you should become a travel agent in your spare time. And I said, I have a lot of spare time. So we're going to do a financial projection for a travel agency. I've done no preparation work. We're going to do it together, and we'll see if it's worth it. So that's what we're going to do. All right, why are financial projections important? Why do you think it's important? You tell me. I don't want to tell you. You tell me. Why do I need to present financial projections? Other than you can see on the screen what I wrote, but any idea why?
One instance is projecting the future.
Good, projecting the future. In what way?
For instance, designating how much money you need to make X amount of dollars. I mean, one thing I was working on to begin with was figuring out my pro forma income statement.
Perfect.
Present to venture capital to like kind of, I guess, inform their decision about how profitable my company can be in the future.
Beautiful. I love all those words you just used. They were all beautiful. The pro forma income statement is this is my what if income statement. If I meet this demand, this is what my profit or loss will be. Absolutely. And we need those to give them to our investors, to the people interested in helping us get off the ground. Nobody can start a business, well, let me erase that. It's a whole lot easier to start a business if you have someone helping you fund the startup and get off the ground. So, very, very important. Anyone else? Why else do we have to do these god-awful accounting statements that nobody likes?
Just so you have a realistic expectation of, what you need to come in to sustain what's going out.
Absolutely, a realistic expectation. That's a really big one. I think one of the things on the next slide that we're going to talk about is the 2 approaches. And the top-down approach, we seem to see financial statements that are really wild. They're pie in the sky. I'm going to be, oh my God, all of a sudden I forget his name. Bezos, isn't that the guy in charge of Amazon? Mm-hmm. I'm going to be a multi-bazillionaire next year because I'm going to do everything he did. I had a student tell me that last semester. He dropped out of school, dropped out of Gannon, because he was going to be Jeff Bezos. I said, okay. Not a good idea. He told me it was. But absolutely, reality. They get us in touch with, think about everything. Think about the details. Not just, I'm going to make all this money. Okay, but how? What is it going to cost you to make your product, your technology? It makes you think of every little piece's parts. That's the purpose of this. One of the other things is we never just do one set of financial statements. So not to scare you away, you don't do it once. You do it at least 3 times. You do it a best case. If everything goes well and I become Jeff Bezos, this is what it'll look like. You look at the worst case. What if this fails? How much money am I in for? What about my investors? Am I going to repay them? Are they loans or are they investments? Big difference there. Worst case, and then what's most likely? What's the most likely scenario? So that's another reason that we go through this, this exercise on financial statements. I think we touched on the other ones. 2 approaches, top down, bottom up. Okay? Top down says, look at the big picture. My example of the travel agency. On the travel agency, the US market, I did Google this, actually your IBIS report told me it is a $40 billion industry. Actually, I can't remember the number now. It's a really big industry. There's very few people that are in the industry. Last count was 150,000 travel agents. That's all. There's not a lot of people operating in that world of travel agency. Yet, IBIS World, you guys all know what IBIS World is, right?
Yeah.
IBIS World tells me that millennials and young people are looking to go to travel agents in order to book plans. Oh, I got a little excited when I read all this. So looking at the big picture, we look at 3 things. The total available market. I have a $40 billion market. Top down says, ooh, how much of $40 billion can I make? Right? Big smile on my face. Oh yeah. Versus the serviceable market. In other words, how much of the market do my competitors already have? Because open space in the market is very different than having to take market share from someone else, right? I looked at somebody wanted to do a translation app. Is that somebody here?
Right.
Have you looked at the big picture?
Yeah, I looked at global total available market and US domestic.
And what did you find?
It was pretty crazy. I think it was in excess of, I want to say 256. And then by 2024, it's going to be in excess of 300
Yes.
billion. Yeah.
Right. And then, but what else did you notice? Anything?
Well, are you making reference to like the big players in the game? Yeah.
Yeah. So of that 256 billion, only 2 companies have 90%.
Right.
So that means you have access to 10%, which is all small players, easier to get
Right.
than taking from Google, right? Google Translate was one of them, was it not?
Yep, Google Translate and Rosetta Stone.
I can't remember what it is.
Duolingo, but that's for mobile application
Yep.
only.
2 companies, so you get 10%, you say, well, I'll take 10% of 256 million, right? But now we have to go down one more level. We have to go to the obtainable market. How much is obtainable in terms of that 10%? Which ones are small and struggling? That we could get their market share. We have to look at, is it a regional business you're trying to start? So are you focusing on a general region, all right? These are all questions. Somebody was talking about nail polish, nail salon. So I didn't look at nail salon, but I looked at the nail polish. I was shocked. It's a $10 billion industry. I had no idea. I didn't know that. But North America, think about that, Canada and Mexico included, is only 18% of the market.
It's mostly Japan.
So, okay, so you know that. So it's a bigger market overseas than it is here.
Right.
So something to think about. I didn't see who the big players were in here. I didn't drill down. I just did a quick search. But how much of this is big players? How much is potentially available without taking from the big name players that is very hard to get from? Something to think about. I'm not discouraging. 100% go do it. Exciting. You've got that little niche of it being organic. Not sure that I know what that means, but that's okay. Learning management system, same thing. That's you, Jeremy. Same thing. Big markets. North America's smaller. Now we have to look at, well, what's available? These are all things to think about. These are all things you want to consider while you're starting that planning process. And we want to document. Building your projection is all about documentation. It's all in the story. So when you build your business plan, I'm sure somebody has talked to you about in writing the story, marketing your story. These are all things you want to talk about. I know that this is what the market share is. I know this is what the big players are. I know that maybe I have access to 10% market share nationally, but in the region, blah, blah, blah. All right? Learn the trends. So when we talk about the travel industry, which we're going to do at the end of this, I pulled up the 2 biggest travel players. No, I take it back. There were 4 major travel players. Google, Expedia, Bookings, and American Express. Those are the 4 biggest travel agencies. Okay? I pulled up Bookings and Expedia. Google, I tried way too hard. Couldn't figure out what piece of Google was only travel. And American Express was the same thing. And I pulled out those financial statements, and we're going to look at those at the end of the session today. And we're going to try to read what they tell us. You know, I don't have to reinvent the wheel. In the top down, I use my competitors' information to help me build my particular company. Right? We're going to see that at the end. We're going to learn about trends. Is it growing? Is it shrinking? What is their growth percentage, right? What are some of their expenses? Something that maybe you never thought about. That, hey, in the travel industry, there was something, hostings. I wouldn't have thought of that, all right? And then apply the trends to your business. Bottom up says, I just want my business. I don't want to look nationally. I want to know about my business in my area, right here, right now. This is the expenses I know I need. I want to make revenue of X. Dr. Joe talked to you about revenue projections, right? Hopefully you got a lot of knowledge in that on how to build a revenue projection. I'm going to help you more on the financial statement presentation and the things you're going to give to your investors, and also the cost side. We're going to look at the cost side. Based on internal drivers and constraints. What am I talking about? When we start doing these projections, what are internal drivers and constraints? Anyone know? Online folks, any idea what a constraint is or an internal driver? There's one big one.
Yeah, constraint is like a limiting factor, but I don't know.
So what's your limiting factor right now?
Mine? Financial resources.
There you go. Number one constraint on a business startup. Financial resources, right? And if it's not financial resources, maybe it's the equipment, the capital expenditure resource. I need a server, I need more than just a laptop, right? So we talk about constraints a little bit. And then we have to estimate all of this, and this is pretty much our focus tonight. Here's a nice little picture. It's a little graphic I thought kind of explained it in a picture pretty well. But this is where we get into the nitty-gritty.
So Renee, what's the advantage of one over the other?
There's not an advantage one over the other. We start top down so that we know what area, what niche we're in, and what our big picture capabilities are. And then we move to this.
Oh, okay. Thank you.
In order to do the details. So it sounds like all of you have already started that top down. You all know your industry. You knew exactly who the big players were. You knew that your biggest competitors are over in Japan, right? So it sounds like you guys have already started the top down. That's beautiful. Perfect. What are assumptions? Assumptions is really simple. It's the reason why you estimated the numbers that you estimated. So when you present your portfolio, your business plan to an investor, they're not just going to take your word for all the numbers. They're not going to say, oh, okay, their rent's going to be $600 a month. They're going to want support. They're going to want details. They're going to want, how did you come up with that number? It's not just going to, people don't lend money like on Shark Tank. And they bicker back and forth. That's not really real world, all right? In the real world, the investor, they look at those financial statements and they look at every number. They also look at ratios, really, really important. We're going to end with ratios, to see if you're in line with where they expect you to be. And if you're not, they're going to ask you detailed questions. And that's what the assumptions are. Did you get your numbers from competitor analysis? On my travel agency industry report, it says 2020 travel agencies down 45%. 45% because of COVID. Makes sense. Nobody's traveling, right? Everybody in the travel industry is suffering right now. Well, if I did a business plan and said, oh, I'm going to have a booming year. By the end of 2021, I'm going to have $500,000 in sales. You're going to say, have you looked at your competitors? Have you seen what they've written? Right? Versus website traffic analysis. This is for all my technology people. Facebook has wonderful data analytics where you can get website traffic, right? Lots of metrics out there. Make sure you know those. Your investors are going to be looking for that. Pricing validations. I want to sell this clicker. I have no idea what they cost. $50. And you want to sell it for $100. Your investors are going to say, okay, what makes your product worth that much more? Your nail polish. Nail polish sells for what? $8 to $10 a bottle. You come to me and say, I'm going to sell my nail polish for $25 a bottle. People are going to buy it. Why? Tell me why. Your pricing is not validated against your competitors. Tell me your secret. Justify it. Okay? Supplier quotes, well, competitive bids. Investors always love these things. They like cold, hard facts. I have a competitive bid for, how do you color it? I don't know, dyes. I don't know, different colors. I have no idea. Here's what it's going to cost me. I've done my research. Here's a company that's one of the suppliers I would choose. I'm factoring that in. They love that. They love that. Okay. Questions online at all? We good? Okay. Questions? We talked about too much yet. All right, let's talk about these financial statements. This is an income statement. An income statement gives us our revenue and our expense. When we're doing a financial projection, it's a 5-year projection is what our investors are usually looking for. The first 2 years, for sure, is a monthly projection. 12 months, 24 months out. That's what they want to see a projection on. Now, all depending on your investor. Some of them want to see 3 years monthly. Some want to see 2 years monthly. You kind of got to ask your investors. Year 3 to 5, though, can also be either quarterly or annually, all depending on what's requested of you. So I encourage you to think about a 3-year monthly. And then if they say you could go to quarterly or annually, year 3, 4, and 5, then you just compress it down and only give them annual. it's harder to expand. So if you do year 1 and 2 monthly and then 3, 4, 5 annually, and then they say, well, I want that third year by month, it's a whole lot harder, okay? So be aware of what the requirement is based on your investor. I have seen both on that third year. I've seen monthly, I've seen quarterly, and I've seen annually. And that's it. Income statement, I put this out here for you because you're going to get a copy of this. And this is just a nice list of expenses that I want you to think about, that sometimes people don't think about. Things like, I don't know, sales commissions, travel and entertainment, advertising, shipping, postage, stationery. Do you need letterhead? Go to Office Max, is there even Office Max anymore? And they have that printing company that's not expensive, but you might need it. Do you want your envelopes with your little name on it? You know, things like that. Not expensive, but important. Internet expenses for all of my technology people. Cloud is really expensive. Hosting sites is really expensive. Domain names, all those internet things. I have so many technology people here interested in technological things. All of that stuff is very, I don't want to say very expensive, but it'll add up very quickly. Depreciation, we're going to talk about legal and professional. How many of you have your company actually formed, organized, set up? What are you set up as?
An LLC.
LLC.
Same.
LLC.
Nonprofit.
Nonprofit.
LLC.
LLC. What are you guys set up as? Oh, I can't hear you. Why can't I hear you?
They have to unmute themselves.
Oh, you have to unmute yourself.
I'm not set up yet, but I plan on LLC.
Okay. So why are all of you in LLC? Did someone advise you of that?
Yeah, I was advised. Yeah, I'm also in a partnership. So.
Well, you're not both.
No, I'm saying I'm in a partnership.
Okay.
I'm saying with somebody, so I
Okay,
was advised to do an LLC based off a couple criteria.
good, good. So LLCs are really nice. They gained popularity over corporations many years ago. I don't know, 15 years ago or so. They're really, really nice. However, there is a slight drawback to them. And that is if you're a single member LLC, which means it's just you. Or if you're married, you and your spouse are viewed as one. So keep that in mind. If it's you and your husband, or you and your wife, or you and your significant other, doing a partnership, an LLC, you are viewed as one member. Okay? But the problem with an LLC is you are viewed as what's called a Schedule C taxpayer. That's not a good thing. It gives you all the benefits of being a corporation, but the tax ramifications are not so good. So if you did an LLC, talk to, where's that? Legal and Professional Services, talk to a CPA about making the election to be a corporation, right? Because otherwise you have to pay the 15% Social Security tax, Social Security Medicare tax on any profit you make. So just but legal and professional, you know, those add up quickly. The articles of LLCs, they have to be submitted to the state. That adds up quickly. Insurance, a lot of people don't think about insurance expense, but you definitely want to have some insurance expense on anything. There's even like a loss insurance. You probably don't need that, but make sure you're covering yourself. Okay? That also includes workers' comp if you start to get employees and things like that. And that's the other thing, is payroll. We're going to talk about that in a minute. I don't want to jump ahead. Income statements. Sales minus cost of goods sold. The cost of the product is gross profit, right here, minus expenses is operating income. It's not net income. And then we have to subtract off interest and taxes to get to net income. Okay? Often your investor wants to look at what's called Ebitda, earnings before interest, taxes, and depreciation. Earnings before interest, taxes, and depreciation. So please be aware that that's not a number that we see on financial statements, but it's a number that's frequently asked for. So it is the income from operations, and then add back the depreciation. We'll talk about that a little more too. Revenue. You just can't put a revenue number out there. Revenue has to be supported. So in your financial projection plan, you need to support your revenue. What are all of your sources of revenue? So this I'm going to need some help for you. You will be a nail salon, so it'll be customer revenue, but also selling nail polish, right? So you would separate your revenue into salon and nail polish. And then I don't know, is there another revenue stream there? I don't know.
No.
I can't think of one. Unless you do like a corporate account or something like that. So regular
Oh,
people.
maybe, because I would like, I mean, this is down the line.
Sure.
People have to like the polish, but, if professionals want to purchase, that would be separate
Okay,
from like customers purchasing.
perfect. Perfect, absolutely. So you might want to have 3 revenue streams. And this is where we break it out. We break it out by units, we break it out by selling price, because those professionals will get a professional discount, right? So units and price per unit, depending on what it is I'm selling. Per translation app.
Mine's based off of a freemium model. So essentially, that's like somebody downloads the app. They're either paid to remove the ads within the app, or we make money off of posting ads in the app from mobile ad networks. So
Okay.
we're making money either way.
So you have client, customer, and you have a revenue stream through advertising.
That's correct.
Good. Okay. Jeremy, any idea what your revenue streams are?
Yeah,
Nonprofits are really different.
yeah, so mine would be CRA funds,
Tell me what CRA is.
the Community Reinvestment Act funds,
Okay.
you know, because I'm focused on like low income, so I have those. Donations, obviously being a nonprofit, a lot of people get write-offs. Just like Jeremiah was saying, I'm looking to be in the application, so once we build a bigger user base, try to incorporate like advertisement, sponsorships, things like that.
Federal grant?
Federal grants, I know since like, I'm African American, I'm pretty sure there's a lot of minority grants coming out as well. So just like, basically, yeah, so CRAs, donations, grants, advertising, yeah, a little bit of everything.
Software as a service subscription based on a monthly rate, and then also consulting services. And
It's a good thought.
I want to do a digital course for a no-touch revenue stream.
Embedded in the software?
Nope.
Oh, okay. So that might be 2 different businesses?
So it's a means to drive awareness and training. Like my competition isn't other software providers. My competition is status quo and using paper and using email. And so in order to go from email into an app, when you're in industry that doesn't get used to stuff like that, they need to learn how to do it.
Okay,
So this digital course teaches you how to do it.
interesting. Very nice. Latasha, Letitia, can you tell me about your business and what your revenue streams might be?
Sure. Can you hear me?
Yes.
Okay, so I have a dance studio, and some of the streams of revenue for me would simply come like the classes, the clothing and the costumes, selling and offering. I would also sit up and do like the competitions for the in class itself, things of that nature.
Okay. So I could potentially also see your streams as possibly age specific, so that, because you're a dance studio, right? So Is it the same price for me to learn how to do tap dancing that it is for my 4-year-old to learn how to do tap dancing?
No, it would not.
Oh, really? Oh, I think I'd be much harder to teach.
Letitia, what about another revenue source is, do you charge for your year-end showcase show?
The recital.
Yes.
Yeah, ticket sales.
Right.
There you
right,
go.
right.
There you go, good one.
$20 a pop. Well, my daughter just stopped dancing after 12 years, so. I'm familiar with the revenue stream of online dance studio.
Ken, how about you? What business are you? I don't remember. I'm sorry.
So my business is kind of a social media marketing for restaurants and small businesses, focusing on restaurants particularly because Erie's starting to be a little more varied in the promotion of like small restaurants with things like the food truck, or I'm sorry, the food hall downtown and the food trucks business blowing up in the past few years. So I think that my revenue stream would come from restaurants, small businesses, growing businesses, for photography services and videography services for kind of a biography,
Good.
and kind of a look inside the into the owners and chefs and the cooking.
Good. Good. Oh, that's great. I wouldn't have thought of that one. Trying to think of anything else. I think you've hit on a lot of big ones. Would you charge the restaurants a fee for being a part of this?
I think that about I'm having ideas of like expanding the way that I can promote them through other methods, like maybe a service of like highlighted restaurants or something for a certain amount of time, so they would be able to pay a service for that and get specialty promotional services that way.
Okay.
What about
Yeah, kind of
influential
similar.
marketing?
I'm sorry, I didn't hear you.
What about influential marketing? Having influencers for those restaurants?
I didn't have that idea, but that's a really good suggestion.
You are so welcome.
Sign me up.
There we
All
go.
I do is eat.
Yes, Diana would like to be an influencer.
Yeah,
I'd do it
for
free.
the business itself, but also for the separate restaurants and businesses that way. Yeah,
Great.
yeah, that's very good. Thank you.
So another thing to think about is kind of outside the box. I think about my husband. So real quick, my husband, I'm a CPA. My husband is a CPA, but he's not really a real CPA.
Mhm.
He's an entrepreneur. He likes that risk taking. And I will tell you quite honestly, some of his ideas have been really good and some have failed miserably and sent us down a very dark and deep rabbit hole that took years to dig out of. So some have been good, some have not been good. And he's always on to something next, something new. So when we first got married, we were both doing taxes together. We had a CPA firm, an actual CPA firm. We did people's accounting, we did their taxes. And you know what I thought he was nuts, but it was very successful. He partnered with the local pizza parlor, where for every friend you referred, you got a free pizza from this pizza parlor, small pizza. And you get a little coupon, and you take the coupon into the pizza parlor, and they'd give you a free pizza, and then they'd keep track of it and bill us at the end of the month. I thought my husband was crazy. However, it was really successful. It was one of his good plans. So always think of outside the box. I'm not a marketer. I'm not an outside the box thinker. I'm sorry. But you guys are in this together. There's 6 of you, right? 7 of you, 8 of you, I kind of lost track. But think of how you can interact amongst each other to help one another. You know, you're all at the same place, and how can I build off of each other in order to use it as a stepping stone to help both of us? All right, so that's always one of those little things that I've always learned from my husband is some of the good things, that he has done. And he's done many good things, I have to say, but I've learned a lot from him and his marketing background that he has. So anyhow, all right, well, it was exciting to hear all of your revenue sources, and it sounds like a lot of you are really ready to start the financial projection process if you have not already, because you've given a lot of thought to this. The hard part is, how do I put numbers to it? How do I put numbers to it? And that is only from doing your homework, looking at your competitors. That I can't do for you, but it is, go out to your competitors, go out to Rosetta Stone, go out to OPI and look at their nail polish, or go to a nail salon and look at their pricing. You said you really don't have competitors.
Oh, I do.
So there's got to be some competitors out there on project management software, because it's really what, from our discussions, sounded like what it was you were after. I could be.
No, I think you're right.
Not there, but I think it sounds like that's what you're after.
That's a good place to look at competitors, because coming from corporate world, I associate the competitors with what they would buy, and that's not what my
But
customers
you're not
would
selling what they buy. You're
Right.
selling let's make the transition smoother. Let's make the communication better. Let's make the timing better. Let's make.
Yeah,
You're looking at process. You're not looking at product.
yeah.
Right?
Yeah.
So I think I would look that route if I were you.
I think that would be good for pricing too.
Yeah, I think project marketing pricing would be the direction to go. Yeah. I don't know enough about the not-for-profit world. I'm sorry. And not-for-profits, it's a little harder to get data on because they're not public entities. You know, we could go out to. However, I have a great. Oh, my computer's not hooked up. You can go out to the IRS, and it's not going to give you enough detail.
Can't you get stuff from GuideStar?
You could get stuff from GuideStar. That would help. Do they have access to GuideStar?
I got on it the other day and I
Oh, okay. Without having to pay?
corrected them a bill.
Good.
I don't know how.
Way back when it used to be a pay.
Oh my gosh, she's a
Right.
subscription.
Okay.
And the only thing you can see is their 990 filing, right?
Well, so if you go out to the IRS, you could download all the 990 filings. I actually have that.
My
Multiple
boss
years.
actually is a CPA also, but she does a lot of nonprofit work. So I can always talk to her and then give you her information. She would probably be more than willing to help too if you need help.
Yeah, more help than area.
Oh, thanks, Diana. Very sweet.
I don't know if it actually would help. She works with NAMI right now, I think.
Wonderful. Great organization. But that is the other thing, is to reach out to other nonprofits.
Yeah.
And see how you could partner. So one of my husband's biggest clients is a not-for-profit in Cleveland. And he has reached out on their behalf to other not-for-profits in order to say, hey, how are you doing this? How are you handling this situation? So that we can learn and change. I know the process isn't working. I don't know exactly what the right process is. Let me go to your company and say, hey, tell me how you do this.
Right.
So don't be afraid to ask. And for all of you, please don't ever be afraid to ask questions. From your competitors, from really anyone who's willing to talk to you. Use them. You know, a cup of coffee goes a long way. I think we're slowly returning to that world where you can go have a cup of coffee with somebody and discuss business things. We're getting there. I know I've had some. I know my husband has had some meetings. I think we're moving back on that direction. So once we have a starting point, now we go back to those assumptions. And where do we say, here's what we have to know. What is our sales cycle? Tell me what the sales cycle is. What is the sales cycle?
Are you talking about how we break down the financial year? Like quarters, maybe?
No,
Okay.
no, but that's a good thought. What's the sales cycle? We have to know how many days our sales cycle is. That's a very important thing to know.
Is it like, I'm not good with words, but I'm gonna run out of this much money in this amount of time, so I have to replenish it
No, but
for
that's
the next.
That's the replenishment cycle. I like that idea. That's not quite the sales cycle. The sales cycle says, how long does it take from the time I make first contact, or for me to know, are you an interested customer, till the time you sign up and say, I'm gonna pay you so much per month. So from me going out and Googling translation apps and looking at Rosetta Stone and Duolingo and all of those ones, to the time that they actually say, I want Rosetta Stone, or I want your app, and I'm gonna pay you $20 a month. What is that time span? All right,
I have not defined that, no.
yep, something you definitely have to define. You need to know maybe some people call it the lead time. I had a really cute graphic on it, but I ran out of space. So I didn't, not I ran out of space, I just didn't want to put another thing on, I guess. For my dance studios, from the time as me as a mom go into 4 or 5 different dance studios in my local area, are you in Erie, Letitia? You in Erie?
Yes.
All I know is I walk to my car every day and I pass all these little girls in tutus right here next to Gannon. I don't know what that dance studio is right there.
Longs.
But there's a million of them. My gosh, there's a lot of little kids at that place. And I always think, is there that many people in downtown Erie sending their kids to dance class? Or are people coming from Mill Creek and into downtown because she's good? I've walked by many times wondering that question, thinking, there's just too many people in there to be just.
Oh, she has different locations. She has one in
does she?
Mill Creek, she has one here, she has
It's like
one
right here?
out at Harbor Creek.
Oh.
Right, Letitia? I think Longs has 3
Oh, yeah.
Okay.
or 4 locations.
Okay.
Yeah.
So what is the lead time, or what is the sales cycle from that first time the mom says, I want to come see your dance studio, to having their child standing in a class doing their little tap dance for the first time? I don't know. But it's important because you have to understand that in order to know your sales. So the first month out, and I don't know what your lead time is, I'm sorry.
It's gonna be, I don't know yet, I haven't tested it, but
It's going to be a long time on software.
it's gonna be long and it shouldn't be. but-
It's going to be long. So my husband's working with a very large manufacturer. I'm sorry, say again. Letitia, did you say something?
No, I'm just listening.
I'm sorry, I thought I heard something. My husband's working with a manufacturer right now. They have 5 manufacturing facilities, Maryland, Cleveland, and Florida. And they're using, and maybe this won't mean anything to you, they're using a DOS-based system.
Oh my gosh.
Like it's the black screen with the little C prompt.
Oh,
Yep.
gosh.
And they're making multi-millions of dollars a year every year. And the owner said, he made $15 million last year. He said, I made $15 million, why do I need to change it?
There's a big
Honest to God, that's a true story.
But to go from when you're used to a DOS-based system, the productivity to get what you need is instant. You know the code, you go boop, boop, boop.
But
And you go to a
can't-
web app and it's like,
No, it's not, because you can only get one screenshot. You can't drill down and get the
you
details.
can't get data.
You can only get one number, is all you can get, or you get a report of 1 numbers. So, talking about sales cycle time, he has now interviewed with 4 different computer software companies to install my brain just went blank.
ERP?
An ERP system. I was gonna say CRP and I knew that wasn't right. An ERP system. And it's been 4 months. I mean, they're talking about spending $500,000.
And it's gonna take a lot of resource to convert.
And it's gonna take a lot of resources to convert. So these are all things you need to be aware of. The lead time or the sales cycle time is a really big deal. Okay. I have no idea what time it is.
It is 7 o'clock.
Is what?
7.
What time do we go till?
7:30ish?
No. I thought we went till 9.
What? God, I'm in bed by then, Renee.
Oh. Wow, okay. We gotta wrap this up. I thought my family would be home till 11:30. Okay, I live in Cleveland. We'll have X number of new
You
customers.
drive to Cleveland every day?
What?
You drive to Cleveland?
Uh-huh.
Oh my God.
Monthly sales will grow by a certain dollar amount. I am so sorry. Holy Moses. I had that all wrong. Okay, so we go back to this income statement, sales minus cost of goods sold. I hear this a lot. Cost of goods sold, well, I'm not selling a product. I'm selling a technology. You still have cost of goods sold, okay? The cost of goods sold now is what does it take to get my technology to the consumer, to my customer? Hosting costs, cloud costs, customer support, online payments. This one I didn't think of. This was only from doing a Google search, all right?
So if I was making, that report that you were making before, I include hosting costs in my cost of goods?
Cost of goods, you got it.
Okay.
Yep, absolutely. If you're product-based, material, labor, and overhead. The material, the labor, and the overhead is all those other costs, right? It's your costs associated with production, cost associated with making your product. You're the only one with a product here, so we're talking about.
I'm also service-based, I think you're both.
Well, you are both. You are absolutely both, but this is very important on your
Right.
product side. Okay. And capturing the overhead is the #1 error manufacturers do wrong. Right? #1 error is they don't estimate their overhead of the correct amount. You're going to get these slides. Expenses, I know I looked through that slideshow of Dr. Joe's. He talked to you about fixed expenses and variable expenses. Very, very important to understand what is fixed. Fixed, I have no flexibility on. I am locked into a set dollar amount every month. Your rent, often your cell phone bill. I know mine is what, 40 bucks a month for unlimited everything, right? I know that's what I pay. And I'm locked into that because I'm not willing to lose my cell phone. Insurance. Think about your insurance, whether it's car insurance, if you own a homeowner's insurance, renter's insurance, whatever insurance you have. It's usually a set amount per month or once every 6 months or once a year, all depending how you pay it. Advertising is a fixed expense only because it doesn't vary with production. So my advertising cost has nothing to do with how many bottles of nail polish I sell or how many hair pedicures I give, right? You go out to advertise, do flyers, advertise on the TV, advertise on the internet. It's a set price. It's unrelated to the variability depending on how many items I sell. Same thing with legal. Versus variable will fluctuate in direct proportion to what you sell. So commissions. If I pay a salesman to sell my product, I'm going to pay him a % of the sale. The more he sells, the more money I have to pay him or her. Cost to acquire the client. Any of you watch Shark Tank?
Yeah, cost of acquisition here.
Cost of acquisition, the #1 question that, what's the bald guy's name?
Mr. Wonderful.
Mr. Wonderful. The #1 question Mr. Wonderful asks, what is your cost to acquire? And how many people say, I don't know.
Yeah.
They've learned, right? Now, every time you ask, they got that number. They're not looking like deer in the headlights anymore. Make sure you know that. What is cost to acquire? What does that mean?
I felt like it was tied directly to what you were talking about before, the sales cycle, which is, how much marketing you have to expend in order to, convert a lead.
Absolutely, absolutely. It's all about converting the lead. Absolutely. Cost to acquire is all about the cost to convert the lead. It's our advertising, it's our promotions, it's our marketing, absolutely. And then payroll. If you get to the point where you're going to take payroll either for yourself or for an employee, you just can't think about that number. You can't think about $10 an hour that you're going to pay them or $20,000 a year. Please don't make that mistake. There's a lot more to payroll, things like benefits. Are you going to give them the option of health insurance or a 401k or startup? Absolutely not. But as you get bigger, you need to think about those things. And remember, this is 5 years out. The projection you're doing is 5 years out. So you hope 5 years out you're going to have employees. And you've got to start thinking about all these other costs as you go further out in your projection. Taxes. You've got to understand taxes. So the employee pays taxes out of their paycheck, but the employer, you, also has to pay employer taxes inside of payroll that a lot of people aren't aware of. So please, please, please make sure you are aware of this payroll when you're looking at year 4 and 5, that you understand the payroll numbers. Commonly forgotten expenses, depreciation. What's depreciation?
Loses value?
What?
Something that loses value?
Something that loses value. What am I talking about now? What loses value in your business?
Equipment?
Equipment. That's the number one thing, right? Equipment loses its value through usage. Your computers, your laptops, your hosting servers.
Software depreciation.
Software, absolutely. Software loses value, absolutely. And we have to depreciate it. All right, usually straight line over 5 years, meaning it's divide that cost by 5 years, and that's how much you take away each year. All right? So something to think about. A lot of people forget about the payroll taxes. So you pay 7.65% Social Security Medicare on behalf of your employees. You have workers' comp. You have state and federal unemployment. So there's usually 4 or 5 taxes you need to think about when you're looking at projecting out. But in essence, I would add between 10 and 12% in taxes once you get out into year 4 and 5 for employees. Okay? 10 to 12% of the salary.
Yes, so for a nonprofit, what all,
Same thing,
same thing?
same thing. They still pay Social Security, Medicare.
Okay.
They still have to pay unemployment. Absolutely. Yep. I assume they have a workers' comp. They must. So those are all required taxes you gotta pay. And then expense versus capitalized. So if you're buying that equipment, do I put it on the income statement or do I put it on the balance sheet? The balance sheet is a list of my assets, my liabilities, and my equity. Initially, we want to put everything onto the balance sheet. We want to boost our assets, all right? We want to boost our assets. Balance sheet. I know this looks scary, but this is an actual projection. We start with our assets, cash always first. Now, after cash, accounts receivable. Are you going to take credit? Are you going to have on account? Will you service to a corporation who's sending an employee overseas and they want to learn the language? My cousin was transferred to Thailand. Goodyear, Goodyear tires, right out of Akron, my neck of the woods. They paid for her to do one of those online things to learn a little bit of basic Thai. Okay? Whatever their language is, I guess not. But they did. They paid for her to take some classes to learn a little bit of basic Thai. Would you bill the corporation? I would assume so. You'd send them a monthly bill maybe. They're probably not like a regular customer. So will you have accounts receivable? Will you have inventory? You might have inventory. I don't think anybody else will have inventory. Nothing else. Property, plant, and equipment, that's your computers if you buy a building down the road, anything like that. Liabilities, accounts payable. You'll be buying things. Maybe you won't pay for them up front once you get going. Someone will say, well, I'll send you a bill, pay me in 30 days. That's what accounts payable is. Long-term debt, if your investor says, I don't want stock, I'll give you a loan, that would be your long-term debt. And then down here we have the equity section, which is your common stock. I want ownership of your company through stock versus I'll give you a loan, one way or the other. Or it's just free money, but then it's revenue. And then the other thing is retained earnings. Retained earnings are the earnings of your company over time. That's all it is. Retained earnings is the earnings retained in the company, the money, the profit that you keep in the company. It's retained earnings. And this whole thing has to balance. Notice total assets, 176. Oh, they don't total it. Assets equal liabilities plus equity. Liabilities are 57, equities 118, it equals 176. It has to balance. It's why it's called a balance sheet. All right. If you do your accounting wrong on your income statement, you're going to realize this thing doesn't balance. Number one thing that we see. Balance sheets never balance when people try to do them the first time. Some of those assumptions you have to make. Back to assumptions on we talked about the assumptions on the income statement. Cycle time, how much growth, lead, I forget what the other one was I talked about. The expenses, raises, common payroll, like where's the payroll base? On the asset side, how much cash do you want to keep on hand? You don't want to drain every penny. Absolutely not. Accounts receivable, will you have accounts receivable or will you not? You need to think about that. If you're going to have accounts receivable, I promise you, you'll have bad debt, meaning someone's not going to pay you when they're supposed to. You have to think about that. Can I survive if this client doesn't pay me? If I only have one customer, you don't do accounts receivable. Because what if that one customer doesn't pay? Right? What if you don't receive the money? Now you have no money, right? Prepaids are assets. So my insurance, I pay for my insurance every 6 months. 6 months at a time. That's a prepaid, that's an asset to me. Right? The asset is I'm insured for 6 months without having to pay out any more money. For 5 months, I don't have to pay a dime. So think about that in terms of your insurance, hosting fees sometimes. My husband has a cloud thingamabobber. I don't understand this cloud thing. He pays that quarterly. He pays the cloud quarterly. That's a prepaid. That's an asset. Okay. So always think if I'm paying in advance for multiple months, not like I'm paying on the first for that month. That's not what I'm talking about. I'm talking about I'm paying multiple months in advance. Those multiple months are considered a prepaid, which is an asset. Investors like to see assets. And then equipment. Remember, again, this is a 5-year projection. So you don't just want the information, the equipment, the capital expenditures that I need to start the business. I want to know what do you need to grow the business. So you're going to start with one server and one laptop. You don't want to be there 5 years from now. You better start to show an increase each year when you do this in your PP&E account. Okay? Liabilities, accounts payable. Of course, you're going to have accounts payable probably right from the get-go. Will we receive cash in advance? So this is another thing you need to think about, especially my hosting people. Will you receive cash for 3 months? So I'm going to pay you for a 3-month subscription of your service. Now you have a liability because you've received the cash, you received the money, and now you have to provide your service for 3 months. That's a liability to you. All right, so think about that. If you receive the money on the 1st and the subscription goes through the end of the year, then that, no, I receive it on the 1st and my subscription goes through the end of the month, that's just plain old revenue. I receive the money today, and that money is for 3 or 4 or 6 months, that's a liability.
So is 3 months like the start of?
2 months.
2 months, okay,
1 month would be revenue, 1 month would be liability.
okay.
So be aware of that. Same thing with dance class. I know back in the dark ages, when my daughters were dancing, sometimes I'd pay the lady quarterly, just so I didn't have to worry about writing a check every month. Right? How will we finance the purchase? We've already talked a little bit about that. A lot of investors is what we're talking about. And then we've already talked about the legal organization. Everybody here is an LLC. Please be careful of that LLC, right? Once you start turning a profit. Until you turn a profit, don't worry about it, right? But once you start turning a profit, there's no carryover. There's no loss carryover on a single member LLC versus a corporation there is. So just be careful. Be careful your LLC status is a single member. If you're a partnership, it could be an LLC with a partnership status. That's probably the better of the two. So make sure you want to claim partnership status on your LLC. Cash flow. Cash flow is divided into 3 sections: operating, investing, and financing. And this just says, let me look at the cash coming in and the cash going out. I mean, it sounds more complicated than it is. It's really pretty basic. Operating is the biggest one that we want to look at. Because this tells me what we call our operating cash flow. And that is, how well is your business doing in day-to-day? This is, I could have negative cash flow because I just bought a building, or I just bought a brand new computer system, right? Or I just bought a car so I could put the company name on the side of it. So that could throw our total cash flow out of whack. But I want to know this one. I want to know my operating cash flow. I promise you, your investors are going to look at that very, very closely for each of the 5 years. We want to try to make that positive. And then financing is just that. That's where we put our investor money. So investor money comes in here. If I then, with that investor money, I'm going to buy the computer system and a truck. The computer system and the truck is going to go here. Cash inflow, cash outflow for the, right? Again, we don't care too much about this. But how is it going in the business? So revenue. Is your money coming in, right? Expenses is your money coming out. But your revenue, does it come in all at once? Do you have accounts receivable? Does it take multiple weeks to collect your money? All things we have to look at. This is just what it looks like. Again, remember, this is operating activity cash flow. It's the one we're always interested in the most. Capital expenditures, financing, debt repayment, new debt, and then ending cash balance. What are key performance indicators? These are the key ones. So product-based versus service-based. You should know each and every one of these. In your business plan write-up, you want to make sure you address these. These are the key performance indicators that most people are looking for, most investors are looking for. Break even. Where are you on selling to cover your cost? What is your sales volume in order to cover your cost? Gross profit percentage, revenue minus cost of goods sold is gross profit. What is that gross profit percentage? So before I have an expense, how much profit am I making on every sales dollar? We want that to be in about the 40 to 50%, well, 40% range. That's like a good number. Working capital, assets minus liabilities is working capital. We want that to be a positive number. We don't want it to be negative. We don't want our liabilities greater than our assets. Days sales outstanding. This is only if you have accounts receivable. How long from the date I make the sale till the time I collect the cash? That's what days sales outstanding are. Inventory turns. How long is it from the date? I'm sorry, I take that back. How long is it from the date I buy my product or make my product to the date I sell my product? What is that inventory turn time? How many days is that? Cycle time has to do with production. how long from the time I order or produce to the time I receive it. Customer acquisition costs, we talked about customer retention rate for my technology people in my dance studio and even your salon. What's my retention rate? How many clients have I lost? How many have I picked up? Active users on the internet and sign-up rates. So these are all new revenues from existing customers versus old customers, and number of customer complaints. That's always one of those things you want to track as well. So these are all things that you want to address in your business plan. Software. So there's 3 big software packages. My husband uses BizPlan, is the one my husband uses. He really likes it. He's a CPA, so he said it makes the most sense. And that's the whole business plan product. So that's writing the narrative and the financials. QuickBooks will do the financials for you, and then it'll also help you to manage your business costs. So I'm in favor of this one for $12 a month to make sure you know what your costs are. And then there's some free options. Google Sheets and Excel both have templates for financial projections. Okay.
And then, Renee, one thing I found online is Score. Score gives a free guide and template, so I printed that out for everybody.
Good. So I tried to go into Score, and when it came time to actually enter stuff, it wanted like $9.99 to enter.
No way.
Yeah.
It said free.
I know.
Whoa, I'll have
I know.
to look at it before I send it out.
So take a look at that.
Yeah.
I'm pretty sure it was Score because I can even look at my email and see where they wanted a credit card. I'm like, oh, I thought it was free.
Right, that's
So-
chintzy.
I did see that. Common mistakes, just make sure that the narrative you write matches your financial statements. So if in your narrative you say, I want to grow X percentage, make sure your revenue is growing by that percentage. If you say, I'm going to control costs by doing ABC, make sure your costs are remaining fairly consistent and not like skyrocketing or dropping or going down. Overly optimistic or very pessimistic projections. Remember I told you that top down we have to be aware of because the people get very overly optimistic on that. You're not going to be Jeff Bezos in the end of 5 years. More likely than not, you might be, but it's not exactly definite. So be careful of that. Funding needs that are not adequately explained. You know, how many times have you seen on Shark Tank people come in and say, I want $500,000, and then they don't have a good reason what they're going to do with it. Make sure you can explain in detail what you're going to use the money for. Assumptions not clearly defined. Remember those assumptions, you're going to want to document them in the narrative. In the narrative, you're going to want to say, my assumption is growth will show 3% each year based on company history of my competitor or something. You want to justify everything. Every number has an explanation. Not enough employees in your forecast. So you're going to go from 0 revenue to $1 million in revenue, and you're going to be the only employee. It just can't happen. You can't handle that volume, right? So not matching your employee forecast with your sales forecast. Operation expenses that are left out. So that would be like Jeremiah doing your income statement and leaving out cloud fees, or I don't know, hosting fees, right? Your investor knows your business. You're going to go to someone who knows your business. Don't leave out something that's imperative to your business being successful. And then I had a case study, but we're not going to have time for it because I thought I had another hour.
Oh, Renee, I'm sorry. We could do a little bit of
No,
it.
that's okay. That's okay. What, I don't even know what time I'm at.
25
7:30.
after-ish.
There you go. That's okay. We were just going to do it for fun, so that's
I
all
feel
right.
bad.
Questions? Questions. You know what I'll do? I'll work this up and I'll send it to you and you can send it out to them.
Okay.
We're just gonna do some fun stuff. But can I just show you one thing? I just wanna show you one thing.
Are you touching any part of that? Are you touching any part of that computer?
What do you mean?
No, I'm joking because I had such a hard time.
Oh, I'm sorry.
No, I'm just joking.
So let me just show you a quick thing. And then we'll be out of here. You know what, I always run long on my classes. That's just who I am. All right, so this is bookings, and bookings is, I didn't know there were so many things. They are Kayak, Booking.com, Priceline, CarRentals.com, Open Table. I didn't know they were Open Table, and I've never heard of this Agoda. So I want to know about the travel industry. And look what you can get from your competitors.
So we have to reshare because you're trying to share a screen.
Oh,
Right, so let me reshare for you as you talk.
oh, I'm sorry.
No, you're fine.
Hold on, I gotta get it up there.
Right, I'm gonna stop share, so I'm gonna do a new share.
Okay.
And you want which one? Bookings holding?
Yes, that one. Thank you.
All right, can we see that?
Yep, we can.
Okay, perfect.
So,
Now,
real quick, I just went out to one of my competitors, that's all I did. Because I don't know enough about the travel industry. I'm new to this idea of wanting to be a travel agent, okay? I'm at their annual report, or what's called their 10K. They're one and the same. I didn't know this. In the travel industry, the majority of our bookings are in the first half of the year so that they can travel spring and summer. Huh, I didn't know that. So that, what do they have? They have a whole lot of liability. They receive the money. The travel's not happening for a while. We generally recognize revenue from at the time of booking. So I thought, ooh, that's interesting. I didn't know that. And then it says, as a result of this timing difference, we record marketing expenses when we recognize revenue. So even though I'm booking a liability, I'm not booking revenue, I am booking the expense. So I have no revenue, but I do have expense. I didn't know that. So I learned all of this just from looking at my competitors. Travel. I didn't think about this. I just thought everybody did like a package deal. You can partner with hotels and motels, resorts, apartments, unique places, car rentals, airlines. All of these are independent relationships that must be established. So that would be like you. What other relationships do you need to establish to get a not-for-profit off the ground? Yes, it's with the community and the government, but who else do you need to partner with?
Probably some type of influencer that has a good following. Because once I have them promote the app or the website, it's like wildfire.
Yep.
Because the current thing that I'm facing is there's like an anti-version of my platform. It's like basically they call themselves Forex traders, to where they offer basically they target low-income areas. They charge people $100 to $300 a month for financial advice. And the reason why it's not technically a Ponzi scheme is because they still use the pyramid scheme of the referral program, to where you get two people, yours is free, and you get referral money monthly off of them. But the way they avoid that is that they offer a training platform with Monday through Friday, weekly Q&As.
And that already exists.
Yeah, that already basically exists, all the information out there. But yeah, so basically it's like a legal Ponzi scheme. That's one of my biggest competitors, because they target the areas that I'm trying to help. But they have the marketing, it's almost like.
So how do you differentiate yourself?
Well,
I mean, you can't tell them they're a Ponzi scheme and I'm not. I mean, that's not a good marketing ploy.
Yeah, it's
That's not gonna work.
Yeah, because the people.
I don't know, maybe it will, but I
Yeah,
don't.
the people that are higher up in the pyramid, they're really toxic on social media, where like they'll go to Miami, they'll show the whole skylines, and they'll be like, you could be here if you were on my trading team. So yeah, it's basically a bunch of BS that I'm up against, but that's
you
why.
could show Erie and snow. I can see them all.
Yeah.
And the streets are cloud. Right. So this is hard. harder to do on a not-for-profit, but for everyone else, I encourage you to go look at the people with the big market share. You know, go to that IBIS world, see who has the big market share, then go to their annual report and read it and get all the information you need about that particular industry.
I gotta run, but I
Yes.
wanted your number real quick in case I need my taxes done. 'Cause I think I will.
United Way?
It's the United Way number, 1-888-829.
Okay.
5680. And that's to schedule an appointment.
Okay.
But I'm going to talk with you for 1 minute after. I think that's all I highlighted, but lots and lots and lots of information. If you go out to your competitor's website, okay, the big market share person, to learn about your business, to learn about their growth. If you go down in this, you'll see 5 years worth with financial statements, income statement, balance sheets. You can see their growth. They then talk about their history, their future, and what they anticipate next year. What do they expect their revenue growth to be? All of these are starting points on where to go on your financial projections. I'm very sorry that I did not know my time frame. That is my fault. I'm sure you told me that.
That's okay, I feel bad.
I know, and I just didn't think about it right or something, I don't know. But I'm sorry, I really enjoyed meeting all of you, including my online folks. Thank you. If I could be of any help, honestly, my office is right here, 324 First Hallway. Stop by, say hello. I'm here Tuesday, Wednesday, Thursday, some Fridays, but Tuesday, Wednesday, Thursday, I'm always here.
Do you mind if I share your email with everybody?
Share my email with them, absolutely. And stop by and see me, and I wish you the best of luck. I wish I had money. I can't invest in any of you, but I wish I could. So, good luck to all of you, though.
Thank you.
Awesome, thank you so much, Renee. As always, I wish I had a company. There we go. Ken, Letitia, any questions or anything that you might have?
Where did she say she found information?
I didn't hear her.
I'm sorry, what, Letitia?
Where did she say she found the information that gave the competitors like annual info?
IBIS World.
So you have your industry report
I do.
that I had sent you, right? So it should have that information in there.
Renee, I gotta run to a meeting, but I'll be in touch soon.
Thank you.
Thank
Right down.
Thanks, Jeremiah.
It'll give you the market share. And if you do it online, I know you probably gave her a hard copy, right?
I sent her the PDF.
Okay. If you can Google it online, I don't have IBIS World, so I Googled it online and it gave me just the market share numbers. And then you sent me the report and I saw a whole lot more.
Right.
But I was able to get the market share and who the biggest players are in the market. And then that's how I go into the annual reports.
Okay.
And Letitia, that's something that we can do for you through the Beehive, through the Startup Capital Best Practice analysis that we do. It's all free. So if that's something where you want, not yourself, but us to do, send me an email.
Okay. Thank you.
You are
Thank you.
welcome. Ken, anything for you?
No, I'm good, actually.
All right.
Great.
Oh my gosh, thank you so much for coming. Thank you for
Thank
your
you.
patience
Thank you.
in starting the
Thank you.
technology tonight. And we will see you guys next week. And tomorrow morning, I will send out the PowerPoint that Renee sent, as well as the little manual from SCORE on financial projections. And then before I send it out, I'm going to check and see, once I click on the template for SCORE, is it going to charge you or not? So, yeah. That's all I have.
Okay,
Thank you, guys. I appreciate it.
Can I answer?
thank you.
Good to see you.
Did you have a question?
Real quick,
All right,
what's the
time
difference
for
between
you?
a profit and loss statement